Thank you so much for joining us at our SBA 504 loan program on how to obtain SBA financing for commercial real estate and equipment needs. My name is Patricia Zelayandia. I'm with Texas First Bank, Vice President Business Development Officer. I'm also the president of the North Texas Association of Government Guaranteed Lenders, where we provide training resources to lenders that provide SBA financing in the North Texas area.
And I'm Sarah Rega. I'm with North Texas Certified Development Corporation, and I'm the Vice President of Business Development there. And I work alongside Patricia with the Integral organization as her Vice President.
So what is an SBA 504 loan? It's a loan available to business owners who do not want to obtain conventional financing and are looking to inject less into a project, as well as a program that helps them mitigate their risk through the program. So some of the financing that we provide is for fixed assets such as commercial real estate, construction, purchase of land, equipment, furniture, fixtures, and SBA eligible closing costs. The partnership is between a bank and a CDC with the SBA. Sarah will explain a little bit more about the CDC.
So CDC stands for Certified Development Company. It is not the Center for Disease Control. We don't want to hear about your rash. Please don't call me. I would love to talk to you about financing your business real estate loan. So the CDC is a licensed administrator of the SBA 504 loan. When you come to the bank to get a 504 loan, the bank cannot do it on their own without a CDC to partner with. And the 504 loan is the only loan product that a CDC does. So we partner with any bank, but my favorite is Patricia with Texas First.
Thank you.
So when we're looking at the fundamentals of the 504 loan, the loan at the end of the day ends up being two different loans. The bank is going to do 50% of the loan, and the CDC is going to do 40% of the loan, or it could be 35 or 30% of the loan, depending on your down payment, but we'll talk more about that later. At the end of the day, it's a long closing process, and we'll talk more about how that works, but there are two loans that you end up with at the end of the day. But the lower down payment for you as the borrower and an overall lower blended interest rate. And Patricia's going to show you what that would look like.
So now we have a typical 504 loan structure here that's for a project being financed of $1 million. This includes commercial real estate, closing costs, equipment purchase, as well as any fees associated with the project. So one of the things that this chart shows is the interest rate of each lender. So the CDC's portion, the SBA, is fixed for 25 years, and the bank's portion is going to vary. However, there's a blended interest rate which shows what it would come down to with both of the rates meshed together. So the bank's rate varies, depends on company history, financials, personally, business-wise, as well as experience. So that rate on the chart is just for example purposes, but it gives you a good example of how low the rate can be when it's blended together with the SBA rate, and how much your down payment would be in a project size of $1 million at a 10% down.
So who qualifies as a small business? The SBA has several different requirements, but in general, it needs to be a for-profit business operating in the United States, and they have a size standard requirement. So the business operating company, along with its affiliates, need to have a tangible net worth of less than $15 million and average a net profit of less than $5 million over the last 2 years. When I mention affiliates would be other businesses that the owners or the guarantors of the loan have. If you've got ownership or control in other businesses, we would consider those affiliates, and we will look at those in looking at the global cash flow and your ability to pay back the loan. And this loan can be used for commercial property type. almost any commercial property type, excluding multifamily, because we're going to talk about owner occupied. It's got to be owner occupied real estate. And Patricia's going to tell us about that.
Yes, so what does that exactly mean when we talk about owner occupied requirements? So as an occupied building, what we're referring to is if you're purchasing a commercial real estate and doing improvements, it has to be occupied by you, the business owner, 51%. So you can lease out long-term 49% of the building if you choose to do that, where other tenants can come in and also run their business. However, if you are doing a ground-up construction, you have to occupy 60% of the building once it's constructed, and then 80% long-term. However, we do provide financing just for machinery and equipment as well. So if you're choosing to lease a property, we can do the financing of the equipment. So that's why that bullet point is on the slide, just to advise you, you don't need to own the building in order for you to use this program to finance equipment. As long as the equipment has a useful life of 10 years or more, we are able to provide these terms to you to purchase large pieces of equipment.
So we talked about businesses that qualify. Some of the things that would make a business ineligible for SBA funding. We cannot do loans to businesses that are involved in loan packaging or lending, speculation, investment, pyramid plans, political affiliations, illegal activities. I don't know why we have to put that on the slide. Gambling. They will not provide funds for businesses that sell or distribute sexually pure materials. We cannot lend to businesses of religious affiliation either. And we also cannot loan to lenders who are on parole or probation. So project size. This loan is going to be for projects that are about $500,000 to 20 million plus. And the way that we talked about how the loan is structured, that the bank is doing 50% of the loan and the CDC will be doing a 40% portion of the loan. That 40% portion that the CDC is doing has a maximum of $5 million, unless you are in manufacturing, and that would be $5.5 million. Now, we also have a program called the Green Program, and if your business can generate or reduce their energy usage, they can qualify to have the project go green. And by utilizing this, you can do $5.5 million per property until you meet a maximum of $16.5 million. And that's a great program for manufacturers, or if you multiple locations, say a movie theater or something like that, and you're wanting to grow and have multiple locations, and you just get too close to busting that $5 million cap of SBA funds, because that also applies to 7A funds. I know y'all are learning about the 7A program as well. So 7A funds count towards this $5 million maximum that the 504 has to fit with too. So if you're getting close to $5 million in funds, we will talk about going green. We can hire companies, consultants that will come in, energy consultants, and tell you how to do construction plans and such in order to meet those requirements.
And these consultants will also provide a report that will let the SBA know how much you're saving going green. So the report does need to be provided so that it can be submitted to the SBA with the package to approve the loan under green. So it is essential to get in contact with the company that will be doing the green assessment up front so that we can know that you do qualify to go green.
That's correct.
Next, we have financing steps for the 504. So North Texas CDC and Texas First Bank will work together simultaneously to get the approvals on both sides, because remember, we do have two loans to get approved. So we'll collect the documents together, and as soon as we have enough to pre-qualify you, we will get you pre-qualified and then continue collecting documents that are needed both for the bank and the CDC. Once we have everything we need, we'll begin underwriting and get your loan submitted to the bank for approval. What that means is we'll get it into the bank's committee, and then the CDC will also get it approved for it at its committee, and then it will go to SBA for final approval. Once the loan gets approved, we'll then close and fund. Sarah will talk a little bit more about the funding process.
Yes. So at this point, after SBA approval, the bank's going to close on the loan. They're going to close on the whole loan, both pieces. They're going to do a permanent loan on their 50%, and they're going to do what we call an interim or a bridge loan on that 40%. And so if there's construction on the property, that construction will need to be completed before the CDC will start their funding process. If there's not any construction or just minor improvements, once everything's done, we'll start collecting documents from the bank, recorded documents, from the title company, closing settlements, that sort of thing. And then the process to fund your interim loan, where the CDC is going to come and take out that loan from the bank. Okay. So once we've collected all the documents and are ready to fund, we get on the closing schedule. And typically it takes 45 to 60 days for us to meet the actual funding. SBA fundings for the for the 504 program take place once a month. And that month is the month that your interest rate is set. Earlier in our presentation, you saw an example with the interest rate. Today, the interest rate was around 2.8, and we cannot promise that rate. This is not a situation where the CDC can lock in a rate at any point. Once you get through the final processes of the program and the 504 is about to fund, that is when the interest rate is set. And then the CDC will take out the loan from the bank, and then you'll actually be done. But after the bank closes, they close, and you can move in, you can open your business and get things started. So the second closing of that interim loan that the CDC is taking out happens in the background, so you can get on doing what you do best and run your business.
Yes, so as soon as you get that certificate of occupancy, if you are constructing a building or if you're doing improvements to a building, you are able to begin operations. The second lien funding does not stop you from beginning operations. So as soon as possible, you can begin and start generating income. So what do we look at when we're underwriting? Overall, we look at everything. It's not just one thing we look at. We look at your information personally, from your tax returns to your credit report to your liquidity. We look at your company history. We look at your company's financials. We look at your experience in the industry, if you're not a business owner, or your experience in your business. We also take into account your projections. If you're a new business, we look at your projections, which is required to be able to show the repayment. So essentially, the SBA and the bank want to know, how are you going to repay this loan? And that's what we are trying to decipher through all the information provided. So it's not just going to be one thing that's going to stand out and make this project. It's going to be an overall that we look at. So Sarah will now talk to us about refinancing projects under the 504 program.
Yes, the SBA has two different types of refinance programs that you may qualify for. Conventional loans that are at least 2 years or older can be refinanced with the 504. One option would be the refi with expansion. If you have your building that you've been paying on and you are ready to add on an expansion to that building or open up a second or third or fourth location, you can refinance that existing debt and do the expansion portion all in one loan. And the key to that loan is the expansion must be at least 2 times the debt being refinanced. The other option would be the refi without expansion. The refi without expansion would be a straight refinance of your existing debt. And the appraisal is going to be key for both of these programs, so you can refinance up to 85% of the appraised value. If the amount of debt that you're refinancing falls pretty well below that, you can take out working capital. Up to 20% of the appraised value could be used for working capital. Patricia, do you want to tell us definition of working capital? Like, what could they use those funds towards?
Yeah, so working capital is considered payroll, utilities, supplies, anything that's needed to operate your business would be considered working capital. So if you're looking to finally hire someone new in your business, you can use that money to, get someone new and be able to pay them, so hopefully be able to increase your revenue. So those are some of the things the working capital can be used for, but anything that's needed to operate your business. So now we have some examples of some of the projects we've done.
So our first example here is a Parks Coffee. They have a business here in DFW where they deliver snacks and coffee and other things for company break rooms, and they actually roast their own coffee. So this project was done to purchase a warehouse for them to roast their beans, and they were an existing business, and the property that they bought is actually construction. So the property that they constructed was a multi-use facility. So this project qualified as a 10% down project. We're going to look at two others that have different down payment requirements, and we're going to tell you why each one had a different down payment.
So next we have the Children's Lighthouse Daycare, which was a ground up construction. So we had to purchase land, do the financing for the construction, as well as soft costs related to the construction project, and it included the furniture, fixtures, and equipment, and the SBA eligible closing costs. So this was a new business and a multi-use property, so the down payment was 15%, solely because it was a new business. So that increased it from 10 to 15%. And then last, for examples, we have the car wash. This is an example of a purchase of a car wash so you're purchasing the commercial real estate, the equipment, and it is a new business owner. So they have no experience of owning a prior car wash, and it is a single-use property based on the equipment that it has in there and the use of the building. So the requirement is 20% down on a car wash facility, but it's 20% down because it's a new business and it's a single-use property.
And we talk about single-use and multi-use properties, and those are defined. Multi-use, the SBA has a very specific list of deals that are considered single-use, and just the properties that are on that list are ones that we have to require the extra 5% down for. Some of the most common ones are, like the example we showed you, a car wash, a hotel, a gymnasium, an oil lube center that has in-ground pits. There's features of the building or the property that would make them difficult to be converted into any other type of use other than what it was built for. In the event that the SBA has to foreclose on the property and sell it for future use, they require that extra 5% down to protect them in the case they have difficulty selling the building in the future.
And any building with a pool as well. So if it has like a swimming pool for a swim school, that also would be considered single use, since the pool area can't be used for regular officing. Mm-hmm. So to end this, we have a keys to success, which we can't stress enough that the earlier you're able to communicate with us, the earlier we're able to assist you throughout the process and be able to provide you the information you need and review the documents to see if you are eligible for the 504 program. You're working with both the CDC and the bank, so we know the 504 product. We are able to guide you through the process and send you to other resources if necessary.
Yes, and one of the things that we can't stress enough that really helps all deals move along or can really slow deals down is the borrowers, you guys, making sure that you are sending in documents quickly. We'll have checklists. They'll be long, they'll be crazy, but the quicker you send them to us, the quicker we can do our jobs. And we're not going to sugarcoat it. There is a lot of paperwork there's a lot of paperwork to get a loan in general, whether you're using the SBA or not. It's a lot of work, but the benefits of the 504 are worth the extra forms and searching for documents that we require. It's why we're all here. It's very helpful for you to be able to have access to this financing and the low down payment and the low monthly interest rate. So we will be your advocates. We will help you through the process. Some of you have never bought a building before, and we have customers every day that have differing levels of experience in real estate or any of the. Some of our customers have never ever applied for a loan before at all, and don't know what's going on, and that's okay. We're here to help you, walk you through that process, and we may know other people in the industry that we can connect you to, send you referrals, and help you do those things. Another organization that we will refer you to, depending on how much help you need from us, we like to work with the local small business development centers, and those are they provide free business counseling or one-on-one coach to help you if you are working on projections and how to put those together. The Small Business Development Center can help you with those kinds of things. If we're asking you for stuff you don't understand, there are resources to help you when it does get hard, because you're a professional at your job, at your business, and you're not all CPAs, and you're not all business consultants, and these things are new to you, and that's okay. And the SBA provides great resources to help you with those things, so you can get on back to running your business and making money.
I agree with that completely, Sarah. That's what we constantly tell our customers all the time, is that we understand that this is a big investment and something that you do on a frequent basis. So we're here to assist you through the process, whether it is answering questions consistently via email, text, phone calls, or referring you to resources such as the SBDC, who will be able to help you with the checklist, projections, business plan, any kind of help you can need. So please feel free to check out their website and utilize them. It's based on your zip code. So depending on where you are, personally, business-wise, you can find one in your area.
Patricia mentioned earlier in the presentation early contact in coordination with parties. Patricia, how early is too early, or is that such a thing if you're thinking about purchasing a building or doing new construction?
There's no such thing as too early. Sometimes we talk to business owners who are just thinking about whether this would be a viable project for them, whether they can even afford it. Sometimes you don't realize how much you're paying in rent and how much it could save you to purchase a building. So it's never too early. Some of the leads that I've had or done, projects that I've done, have been on there for 2 years beforehand, and then eventually we get the deal done and close. So there's no such thing as too early, because we both can kind of get some information started with you, and then once you're ready to officially move forward, we're there to assist you. So don't feel like it's a bother to come and talk to us, even about your idea of considering moving to that street down to that building down the road that you see is for sale. You just don't know how much it would cost you to finance that. So please feel free to give us a call if you're tired of making the landlord rich and are ready to purchase your own building and start building that equity. So we're here to assist you.
Yeah. It's really good to think of your banker as your partner. And if you don't have a good relationship with your banker, someone like Patricia here is, someone you need to meet and get to know. You want your banker to pick up your call and remember your name and be interested in your business and be excited about your business. And if you don't have that relationship now, I encourage you to reach out and find a banker that will be that teammate for you. And they're going to cheer you on, and they want you to be successful. That's what you want in a banker. So I encourage you to find that. And if you don't have one, You can call Patricia.
With a duo here, Patricia and Sarah.
And if you're buying a building, we'll do it together. I'd love to be your CDC as well.
This is a marriage for sure. 25 years is a long time. So whether it's you go that long or not, 10 years is a lot too. So it's good to have that relationship with both your CDC and bank. So if you have any questions, we'll be here to answer any that you have at the Q&A session. So we look forward to seeing you there.